Interesting note. Nimesh, thanks so much for joining in and giving us that. Everyone on the street wanted to know the rationale. In fact, Nimesh has brought us just that. Well, Rajesh Kothari joins us as promised. Hi, Rajesh. Thanks so much for joining in. Well, before we talk about the various themes that we wanted to discuss, Rajesh, I wanted to ask you, what's your take on the cement space? Do you all have any kind of exposure out there? You heard what Nimesh had to say. Clearly, the street is baking in that there could be some bit of consolidation. Are you all playing that theme or are you all staying away?
Well, I think, so primarily, broadly speaking, I agree with what Nimesh has just talked about. I think in cement industry, there are few advantages from here on. One is the raw material cost, which is coming down. Second is the energy cost, that is also coming down. So these two, which were the major issues in last, I would say, 8 to 12 months, they started coming to your favor. The volume growth, right now, the housing demand still remains strong. So we expect even volume growth to improve. The only challenge in cement industry was the pricing power, which was not demonstrated so well, if you ask my personal view, in last 3 to 7 to 9 years. And hopefully people believe that with such kind of acquisitions at such valuations, it brings some sanity in terms of minimum return on capital employed, which one needs to earn to make money in this industry. So I think that's basically the broad theme, if you ask my personal view, and one needs to play this theme very selectively because, as the new entrant is definitely has a more thing to chew on, definitely it may create some adverse impact on the existing companies' market share, as well as their profitability, and maybe to some extent the compression in valuations. So, that's how you need to play this theme.
Rajesh, afternoon. Everyone is looking inward because people are worried that the export-facing sectors and stocks may be under pressure. So it's best to play the domestic demand story. And in that, PLI scheme has emerged as a big winner. And this India, the government's flagship program of Make in India has recently completed 8 years. The PLI coverage has been expanded to so many sectors. A few of the stocks like Dixon Tech, etc., have now been well discovered. The stocks have already run up. Could you talk about some of these PLI beneficiaries which are still hidden? Not too many people know about it, but they're doing some great stuff.
Well, I would say, please let's not restrict to just PLI as a benefit, because I always believe that if any company is setting up plant or making investment just to get one benefit or tax benefit or PLI benefit, they are never a sustainable model, right? So what one needs to understand is that whether a company has a globally cost competitive business model or not. And with Europe plus one, we discussed last time, and that time I talked about that we are just working on that theme, and we did a little bit more work on that theme, that from China plus one, there is another opportunity called Europe plus one. And there are many companies, both multinationals having its subsidiaries in India. Number two, the Indian companies who already have the European customer base. And number three, the domestic companies, but who have a large economies of scale, and they aspire to be now the global players. So benefit will flow to these three buckets, So we have done a very detailed, exercise on this. And there are a number of sectors which will benefit from this theme. Capital goods, of course, going to be the one sector. Specialty chemical is going to be second sector. Very selective auto ancillaries will be the third important sector. And few, probably you can put everything is like others kind of thing. So these are the three major sectors, capital goods, specialty chemical, and auto ancillaries, which will benefit from this theme. And I think the trend has already started. Many of companies in our portfolio, they are seeing the increased traction from the parent company, particularly based from Europe. Many of our companies are also getting the higher offtake from their customers, particularly in specialty chemical. They are getting the incremental orders. They are also getting the companies, particularly who have a European approved facility, European regulator approved facilities. They are also benefiting in a big way. And I think the trend is just a beginning. And therefore, while we all discuss about the global and US Fed, inflation, and so many things, but the fact of the matter is there are companies probably who can double their earnings over next 4 to 5 years. And that's where you need to focus on to create money out of it,
Okay, all right, Rajesh, noted that, I want to take that chemicals point ahead. But by the way, just need to pull up the intraday chart on the Nifty. It seemed that we were breaking away towards that 17,080 odd mark, but we met with some resistance and now we've seen a quick 40-point downtick. The last 30 minutes are coming up, so let's see whether or not the bulls have got enough fight. But we went to nearly around 17,080, and from there we did see some bit of selling. But Rajesh, you were talking about the chemical space. And GNFC is a stock that has suddenly spiked up. I understand there has been some kind of capacity shutdowns in various parts of Europe, and that's why TDI prices as well have moved up. Any view on the stock in particular? You all have played it otherwise via various other specialty chemicals, but any view on this one or the themes you like in that space?
Basically, this particular name, we do not have any specific comments. We do not own this company. I think what is very important is please differentiate between two sets. One set which is going to benefit because of the rise in commodity prices. So underlying business, if it's a commodity in nature, probably is a temporary phenomenon. The stock may do well, but it might be temporary in nature. And second important bucket is where it is a really business mode. It is a really global cost competitive. Are you going to see that kind of a trend, more approvals from the customer, more offtake from the customers, more participation in the technology collaboration? And that's where the specialty chemical companies, particularly the fluorine-based chemistries I'm talking about, they are getting a significant benefit out of it. And that trend will continue even to the other chemistries apart from fluorine. And I think it is just a beginning. If you ask my personal view, specialty chemical is going to be another at least 5 years plus opportunity. It is going to be a structural theme for 5 to 10 years. So it is a cyclical business, but because China plus one and Europe plus one, and companies have proved their business models and their cost competitiveness, I think it's just a beginning. We are at an inflection point, and we may continue to see, companies doubling their profit, making huge expansion over next 3 to 5 years.
All right, Rajesh, just to counter question you on that. So Naveen Fluorine is something I think that you all have been positive about, right? Besides that, anything you want to disclose with regard to what you have in your portfolio or your clients have it?
Yeah, I mean, whichever companies we have talked about, we might be holding for our PMS clients or personally. So kindly please put that disclaimer.
Defense, Rajesh, is that a space that you find attractive? Because stocks have run out. They've gone through the roof.
Yeah, I think it's going to be a very interesting space, particularly because of the Make in India efforts by Government of India. Again, in this theme, you need to be very, very specific. You need to have a stock-specific approach because if you take a general view that defense is going to do well, it may not so happen. At the end of third year, you may see there are many companies probably they have not got approvals. Ramp-ups delays are always there, being a government-run kind of a programs. Please remember that everything, whatever government approves, then it needs to get tested. So really long gestation projects. So you need to be really stock specific. We own one company, Hindustan Aeronautics, in this space. We like this company. Of course, company has a very strong visibility and company keep getting the new orders in the new segments. If you look at last 3, 6, 9, 12 months, and I think the company is really very well positioned to continue to gain more market share, compared to import to Make in India. So that's one company which we own, but nothing apart from that.
Rajesh, thank you very much for joining in today. By the way,